Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 10th, 2024. Today, the bottom dropped out of it when they had to tell the truth about inflation. And the bottom dropped out. So let's start with the hybrid frog for the hybrid swing workshop. We're looking at 30-minute charts, starting with Alcoa. We got the PSAR flip and short at the usual spot, the standard risk. When the R10 rolled up, we took the exit at the skin of the dragon. That gives us 1R. That was actually one of the healthier trades or symbols today. AI, big gap down, standard short, standard exit, 1R. Caterpillar. This was a 1, 2, 3 entry. After the VWAP reversed, you get this huge sell-off all the way here that closed up here and then kept going. When it crosses the PSAR, I got long here, standard risk. And then this weakness coming back towards the PSAR, just captured 0.5. That was a lot of work for not much. One thing I've been playing with is the is this 5-period VWAP is right here, this dark red. I've been experimenting with a 3-day VWAP, which is the purple. And so when the 3-day crosses below the 5-day, I think that's telling you something that's where the preponderance of downward pressure is coming from. So I'm toying around with the short-term 3-period anchored VWAP versus the 5-day to start getting a feel for where the turning points are in the psychology. I mean, the slope is important, but the fact that the 3 is below the 5 means that the short side volume is accelerating to the downside. So that's starting to feel important. This is Cliff Natural Resources. What I like on this one is that the 3-day leveled up and is heading up. 5-day is stable. But after the reversal here, this has been pretty strong. So today we got the PSAR flip with a standard risk. I salvaged a fraction right there. It was up almost a full R. And I kept the piece and then re-entered when it crossed the Bollinger Band and exited with +1 by the end of the day. I like this here for tomorrow because you have the 5-day VWAP, the 3-day VWAP. The 1-day VWAP was very strong. Price action was very strong. So I think tomorrow there's a good chance it gets up into here. So this feels like a turning point on the basis of that, of reading the tracks. Know your targets and the kinds of tracks they leave in the snow. This is Chevron. Yesterday, the slide began after that consolidation zone right here. Yesterday, the slide began. We exited here. And then there was a continuation gap down, so we got short on the collapsing dragon with the standard risk. And that thing was just perfect and then went sideways. And when it ran into the dragon, we exited. And that one returned like 4R. That's a really smooth, orderly trade. I'm liking that one a lot. Diamonds, Gap down and tried the short. I salvaged the scratch and missed the rest of the move, but this was actually pretty choppy. So this sort of tells me that this might be just a one-day surprise inflation. Like this feels like current fair value in the Dow. So what that means is if this is the one-day VWAP in the current price, and you have the 3-day and the 5-day and the 30-day here, then the surge to fair value would be to try to get it back to those two price levels. So tomorrow, at the first sign of strength, I'm going to be long DIA. I'd like to see it get all the way back to the 30-day. But this feels like the excursion against longer-term fair value. And so if this actually is a turning point, if that hypothesis is true, we should see 1, 2, 3 nice legs moving forward in DIA. I would expect that there to be some buy on dips. Disney, no trade. Devon Energy, when it rolled over, got short, picked up an R in the usual way. Emerging markets, huge gap down, sold the weakness. It recovered back to the VWAP, and I exited with half an R. I missed the second move. Ethereum, second day of weakness, but it's pretty stable. Yesterday's sell-off came down here and stabilized on the 5-day anchored VWAP. It just stayed there today. There was no downside weakness at all, which I take as evidence that this, at the first sign of strength, this thing wants to go. There was opportunities for it to fail today that it did not. Mexico, emerging dragon gap down, sold off. This one big spiky bar managed to get me out here at the skin of the dragon, like I'm supposed to, and that's about 1.5 R. More weakness available there tomorrow, I think. Brazil, same trade, 3R. Home Depot, big gap down and sell off. That's a span of control, just didn't have slots to bear. Intel continuing to slide on weakness. I got to tell you, Intel was very interesting to me on the midterm to long term, the next, 10 to 90 days, because they've got a new chip, which is better than the NVIDIA and the AMD chips for AI. It's an AI specialty chip that's supposed to be, it's cheaper, more efficient with energy, and uses 50% less power, and outperforms the NVIDIA and AMD chips. So both these guys have been fully rewarded because of their AI chips, but Intel has been getting just murdered. So I think we're getting ready to see a value play on Intel on the basis of expected AI earnings. So let's keep an eye on that one. IP, no trade. I like the fact that it turned the corner today. This is feeling like, and it closed very well right here, almost back to the 5-day VWAP, and here's the 3 that's starting to roll up, and you can see the move happening to recovery. So if it breaks north of the 5-day anchored VWAP, then we see this as a target, and this is your second target. That's the move that's available. Real estate got slaughtered today. Collapsing dragon gap down and drop, and that picked up 3R, exiting at the skin of the dragon. Nice trade. And here's the case where, again, you got the 30 anchored VWAP decay. The 3-day today just crossed below the 5-day. So there's an acceleration factor in here. At the first sign of weakness, like below 85.50, I got to be short on that. With inflation, nobody's buying houses, so real estate's going to suffer. This was a stop and reverse in Coke. So we were long yesterday, and then we managed to turn a 2-hour gain into a 1-hour loss. Stopped and reversed here and picked up 1 hour on the rebound. Regional banks, KRE. Another big gap and drop trade with standard risk. Should have had a second position on it here. After the recovery, we took the exit at the skin of the dragon. I think I gave back too much, but that's still a pretty good trade with 1, 2, 3, 4, 5R. And this move left all of this behind, so there's a lot more coming. This is the first leg of the winter, and it's stabilized momentarily here. At the first sign of weakness, you got to get short again. McDonald's 1, 2, 3 off the bottom for an R. No way am I holding that overnight then. 3M for a fractional gain on a 1, 2, 3. Merck, no trade. Marijuana was oddly quiet today. There was a collapse right at the end of the day. I didn't chase, but that's a strange anomaly right there. What's useful to note is you got the 5-day VWAP, the 3-day VWAP, and everything tightly clustered right in here. And in the last half hour, a big drop off. Are we going to see a gap down and reverse? A gap down and drop? In an orderly reverse? I don't know, but it's in play. Nike, gap down, sell off 1R after a standard exit. NVIDIA, this was a gap up and gained an R. Nice news for tech. Clean energy, fractional gain. Palantir, no trade. Rivian, no trade. SU. So I was spending more time on the indexes today. This is the S&P. After the big gap down, it just chopped around. It's trying to put a bottom in. So we'll see if this is just a 1-day. And then here's the repricing in treasuries. Wow. That's giving you a 4% yield now. TLT is given a 4% yield. Nothing wrong with that. Tesla, gap down and drop for an R. Walmart, one of the few bright spots. I managed to misplay this one beautifully. Here's the emerging dragon, gap up and go. I ran all the way up to here. I let it come all the way back and cashed a fraction and then missed the re-entry. Just brutal. Caught a 2 in US Steel for half an hour. XLI, I missed the gap and drop. But again, this is one of those where there was a lot of initial losses on the gap down, but then stabilizing at the new price level. A lot of volatility to be sure, but more of the big indexes were sideways and repricing rather than rapid sell-off with panic. So we'll see how that shapes out tomorrow. Here's 3 sniper trades of the day. This is CVS. Now, this is a opportunity short. Now, here's the RL10. Now, when you see that sell off and a quick rollover, that pattern tells you be ready for that collapsing dragon to break and ready to get short. And that's what 5R looks like. Notice how good the PSAR is and the Bollinger Band mean. All right, this is EWZ. So this is another opportunity trade. Here's the yesterday's close. Here's the gap opening, choppy. You got the PSAR, the Bollinger Band mean, everything coming to a head right here. And then the break. That's where it breaks below the PSAR. So we're short from here. Just take a standard risk box there. For about an R. Try to re-enter to the short. Grinding for 0. So we'll take an R. This is Mexico. Yesterday's close. Here's the gap down. There's your OR3. Here's the break. Short. Standard risk. This reversed. You know, the break, it went to here and then recovered. At this point, I exit here just so I don't lose any money. And then it goes this 1, 2, 3. That feels like a COTA 2 and a PSAR flip. So I get long. That's my hope. That's what I get. There's the re-entry, half an hour failure. So I said, all right, I guess it is going short. For an R, re-entry short. Half an R. Man, I'm fighting it hard. Here's COTA 2. Scratch. Man, that was a grind for about an R. You know, you play the signal, you follow the rules, and some days you just get blisters on your hands from all the work. All right, here's George. This is one where, you know, I know he's kicking himself for, you know, after the big gap down. Quick sell somewhere up in here. We might be thinking about getting long. This is what the one I want to show you though is when the R10 reverses up. Now the skin of the dragon becomes. This is where you would exit if you had been short in here. The skin of the dragon is your exit, which means you could be getting long kind of anywhere in here. So this is not bad. This ran all the way up, came back. So he harvests 0.1 and then decides not to chase. That's fine. 0.1, we'll take it on a massively down day. Nothing wrong with that. But just you could start thinking about some of that earlier mojo. He then tries the second entry short. Now, this is where I'm going to coach you on the use of the VWAP. So you got the VWAP here, right? When this thing sells off hard, comes up momentarily through the VWAP and then breaks down again, right there is where you can get short. As soon as it crosses back below the VWAP and you're below the previous resistance level, that's a CD. Collapsing dragon available here, and then put your stop just above that peak, and now you get this trade. This is still fine. That's a collapsing dragon on this, but there's actually a collapsing dragon here, and it's geared towards appreciating what the current VWAP is telling you. That's the key price level right there. So when it breaks down below that and the move of the day is down, that's where you can be getting short right there. All righty, let's yeah, our 150-day look back. This is now at the 10-day low, and it's broken through the Bollinger Band mean. It's on the wrong side, fellas. Next target is the 30-day low. Then this little blip in the RL10, and if that one fails, which is 500, that psychological level, there's no resistance or support in here. That is not much support. It then falls to 470 pretty fast, which is the long-term fair value. This is the 150-day anchored VWAP. So damage control. Now, conversely, because everybody's now nervous in the service, this now becomes a tradable move. And then if it breaks above that, free and clear. So that makes this a compound critical state. Tomorrow will be fireworks. Thursdays I work from home, so I'll be trading my tail off tomorrow. Tactical Thursday. So yeah, today's open at the high of the day. Big harsh sell-off, and then a nice little recovery back to here. So there is some buying pressure in this, but notice that it penetrated the Bollinger Band again. And the 30 VWAP is starting to roll over. Yep, this is looking weak. All right, let's look at the dashboard number one. Still bullish normal, risk off, and that's been a, boy, how good was that indicator giving us the warning in time. Short-term weakness and now mid-term weakness. Long-term strength for sure, but this is the one that gets our attention. You got buy on dip opportunities in both channeling and overreaction. That's true. So that's this little block right here is the argument for the upside move. That's the upside part of the compound critical state. Dow Tactical, Lots of breakdowns today. Apple and Boeing, Goldman Sachs, Home Depot, Intel, IBM, Johnson & Johnson. ExxonMobil and Energy was doing fine. Devon Energy was doing fine. Chevron was doing fine. That's telling you XLE is your only source of strength right now. The ETF's only weakness, a ton of auto framers that are setting up better than 2-to-1. A ton of auto framers. You got the Dow, some short-term weakness. IWM, IYR, and regional banks, to me, based on their move today, there's a lot more pain and suffering that's ready to hit right there. That was a horrible intraday chart. Yeah, this is the one that just shows the ExxonMobil, Chevron, Devon Energy, the whole energy complex. A little bit of life in U.S. Steel, and Procter and Gamble is the oddball. Just brutal pain and misery everywhere you look, except oil, energy, oil exploration. The misery in KRE, the regional banks, and XLF Finance, that's telling you, if the S&P is here in the middle, energy is at the upper end and looking great, and XLF Finance is at the bottom and looking poorly. And that's XLF, and the regional banks are even worse. So it shouldn't surprise you when you come over and now and look at the Dow. You see a AXP and Goldman got brutalized today. JP Morgan was not as bad as those two. Nice to know. Looking at the trading value list here. Tesla still rocking. Marijuana still rocking. Clean energy. NVIDIA and Intel. And Texas Instruments in the semiconductor space. Let me come back to this just a second here. The 30-day regression line of the S&P is the black line. And now you see the shorter term regressions are rolling over. So weakness is here. It's below the long-term average and below its 10-period moving average. So that's the retracement. You almost got a COTA 2 action on the slope of the RL30. Even the percent stretch, price relative to the 200-day moving average, it's slowing down while the 200-day moving average is rising. So price is stalling in a bull market. That's what that means. Yeah. Now this puts us at, here's the 10-period regression line Z-score is right at the bottom of the normal channel. So now is this a buy on dip opportunity that then turns this? Now that 30 has almost come back to the zero line. So this could be a buy on dip opportunity that makes this slowly turn, or this could be where the bottom drops out of it like it did here and here. And both of those led to these big sell-offs. So if this collapses here, then it violates the bottom of the river and comes all the way back to here, which is 500. Or it recovers, because that could be a buy on dip. So tomorrow and Friday is a perfect storm of a compound critical state. So mentally speaking, you've got to have that in a little lockbox with a zero state, and you got to be ready to play the compound critical state in either direction. And if this is one unit of risk, there are certainly multiple units of reward in either direction. So you got to follow price and not believe in your directional bias. That's what I want to say about that. All right, let's be ready to get them tomorrow. Take good care, and we'll get this published and posted.